Hello and welcome to Westpac's Davidson Institute. This short video is from the Starting a Business series and is on business structures. One of the key decisions for any business owner when starting their business is what business structure to use. It will of course depend on your own situation and the ultimate goal for your business. In this video, I will talk about the four main types of business structures and some of the advantages and disadvantages of each to prepare you for a more informed discussion with your accountant or solicitor about which business structure is best for you and your situation. You can change your business structure down the track, but this may be expensive and time consuming, so it's best to get the right structure for you from the outset. The four most common types of business structure are sole trader, partnership, company, and trust. As a sole trader, you simply operate as you. You are one person, you are personally liable, you are taxed at your personal marginal tax rate, and you have full control. One of the key drawbacks of this structure, though, is that you only have your own resources, intellectual, financial, and so on, which could be restrictive to long-term growth. The next type is partnerships. A partnership is established via a partnership agreement, which sets out the rights and responsibilities of the partners. A partnership can be up to 50 people. Profit distributions are governed by the partnership agreement. Distributions are taxed then at each partner's personal marginal tax rate. There is limited protection for personal assets, as partners are jointly and severally liable for all partnership debts. With this type of structure, though, you potentially have access to the collective knowledge and funding of all of the partners. The challenge here, though, is being able to get everyone to agree. The next structure to consider is a company. The advantage of establishing as a company is that there is limited liability for company owners. The company is its own legal entity and as such can trade and borrow as itself and is liable for its own debts. Responsibility is split between the owners, known as shareholders, and the decision makers, known as the directors. In small mum and dad businesses, it's not uncommon for the shareholders and directors to be the same people. Company profits are currently taxed at a flat company rate of 30%. While a company is more expensive to establish and administer, it can offer protection for personal assets and be easier to manage a change of ownership in the future. The final structure is trust. A trust is the most complex of all the business structures. However, it offers most protection for owners and most flexibility in distribution of profits. A trust is established via a legal document known as a trust deed. The trust deed appoints a trustee who manages the finances of the trust on behalf of the beneficiaries. What the trust and the trustee can and can't do is set out in the trust deed, as is who the beneficiaries are and what they're entitled to. A trust is a financial entity as opposed to a legal entity. Assets and liabilities are held on behalf of the beneficiaries of the trust, not actually owned by the trust. Profits are allocated to beneficiaries and taxed at the beneficiary's personal tax rate. While this structure is more complex and costly to administer, it offers limited liability for beneficiaries and discretionary distribution of income between the beneficiaries. It's often used by family businesses that may span a few generations or where owners have substantial assets or other interests outside of this particular business. Talking to your lawyer, your accountant, and your personal financial advisor will be beneficial when selecting the legal structure for your business. And remember to take into account what you want to happen to the business in future, not just what works for now. Some of the other information that can be sourced from the Davidson Institute on starting a business is the rest of this series of videos on turning your vision into a plan, statutory obligations, cash management, and risk management. There are live webinars, Getting Started in Business, Foundations of Business Planning, Foundations of Cash Flow, and Understanding Financial Statements. Or you can download the written guide, Ready for Business. Thank you for viewing this video on business structures. We wish you every success with starting your business.